Hi everyone, let's cover my Elliott Wave analysis on Ethereum Classic on the 4-hour time frame. Starting with the bullish scenario, where we're looking at this move to the downside as a 3-wave zigzag structure, followed then by a new 5-wave impulsive move, 1, 2, 3, 4, 5. After 5 waves, you're looking for a 3-wave corrective structure and eventually continuation to take out this high again at about 25.20. Invalidation is the low at 19. You can also see that this 5-wave move to the upside touched the 886, taken from this high at about 26 to the low at about 19. This increases the probabilities to sooner or later take out this high. Now, after this 5-wave impulsive structure to the upside, we want to see a 3-wave corrective move, which in this case is a flat 3-wave A, 3-wave B, and a 5-wave C. Wave A internally is counted as a double zigzag WXY, wave B internally is counted as a zigzag ABC, and then wave C to the downside, which by the way preferably takes out the low of A, which happened as well, should be a 5-wave impulsive structure. Now, if you look at an impulsive structure, you can also use the Elliott Wave simplified methodology, which I invented a while ago, where you basically get a bit of overlap and a bit of a grinding structure in the beginning. Those are your 1, 2s. Then you get your wave 3 to the downside. On here, a bit of an increasing amount of volume. That is what you like to see. And then you move into your wave 4s and your wave 5s, creating a lot of overlap again on a decreasing amount of volume. Now, after your wave 4s and your wave 5s, you're looking for a move back towards the upside. Now, the move towards the upside has to be, for the bulls, a 5-wave impulsive structure, or at least a motive wave. So a 5-wave impulse, 1, 2, 3, 4, 5, similar to what you then count here, or a leading diagonal, which is then a structure like this, 1, 2, 3, 4, 5, then get a correction and continuation afterwards. An impulse, though, is more common. So preferably for the bulls, you would like to see a wave 1, 2, 3, 4, a 5 impulsive structure, followed by a corrective retracement. So a 3-wave corrective structure down eventually pretty much gets confirmed because the high in the middle is taken. You continue correcting a bit longer into support, but then you're looking for price to move towards the upside. And the first target is taking out this high in that case, which is the end of your impulse up. Second target is that high, third target is that high, and then of course continuation to the upside, and we then have to move along and see what happens. But generally what is important here is that after a wave C to the downside, typical impulsive structure, you're looking for at least a bit of a bounce, where generally the minimum target is the 0.382 Fibonacci, taken from the start to the end currently of this move to the downside, which gives you then a minimum target of about $22 for Ethereum Classic. Now we look at the bearish scenario, and in the bearish scenario, the move to the downside here has to be counted as a diagonal, a leading diagonal, because price over here moved towards the upside. And if you want to change the structure, and this is the first move to change that structure, then we have to count a leading diagonal here to the downside. And it has to be said that a diagonal has lower probabilities initially compared to counting a corrective structure. So therefore, arguably the bulls have higher probabilities than the bears. Nonetheless, you would need a diagonal here to the downside because of all the overlap. We can't count a solid 5-wave impulse here without any overlap between a wave 1 and 4. And we can't count a multi 1-2 here, 1-2, 1-2, and continuation down because price moved up. Now in a bearish scenario, you would then count this move to the upside as a double zigzag. So then you have an ABC to the upside in a W, complex corrective structure in a wave X, being a WXY, flat X zigzag, which means this has to be a 5-wave structure. Looks a bit 3-wavy, but still, this has to be the case. And then you have another ABC to the upside to finish your wave Y, finish B or 2, look for continuation down. Now, after a diagonal, a deep retracement is actually preferred. So therefore, touching the 886 arguably for the bears is a target, because you have a diagonal in your wave 1 or your wave A. But the short-term price action between the bulls and the bears is likely very similar, because in a bullish scenario, this move down is counted as a wave C, while in a bearish scenario, this move down is counted as a wave 1. And you're then looking for similar structure, a bunch of 1-2s, you have your wave 3, a bunch of wave 4s and 5s moving into support, which I'll show you in a second. You're looking for a move back towards the upside. Minimum target is the 382 again at 22. But for the bears, you want to see a three-wave corrective structure to the upside, not an impulsive structure. And that's the biggest difference. Here, you want to see a three-wave up and then correcting, right? Continue, correction, blah, blah, blah. And after two, you look for price to move down. So you're looking for a three-wave corrective structure. Three-wave move up, preferably take out the low to like basically confirm a three-wave structure up, then continue correcting, which gives short opportunities, look for a high to be made at resistance, and a move back towards the downside. But in both of the cases, the bullish and the bearish scenario, if I basically toggle on both of the scenarios at the same time and show you the lines, you can see it's relatively similar. You're just looking for a bit of a move towards the upside on Ethereum Classic. We also are at support. We are here at the range point of control at 20. We have a daily point of control at 19 as well. And at the moment, I do not expect this low to be taken before at least seeing a move to the upside to that 0.382 and to the resistances you see here on my chart. So we have a bit of resistance here at about 2150, 2177, and then another pocket here of resistance around 23.5 and then around 24. So those are at least areas of interest once price moves towards the upside, which then finally brings me to the probabilities on Ethereum Classic here, looking for a move to the upside locally to at least the 0.382. Maybe the low is in, maybe you move to the daily point of control, but in both of these cases, I'm looking for an impulse here, being a couple of 1-2s, get your 3, a couple of wave 4s, 5s. Once finished, looking for price to turn around and at least touch the 0.382 taken from the high to the current low or potentially a future low. But the direction is the same. And then basically minimum resistance that I would like to see touched is at least here around that 21.5, 21.7. If passed, could look for the higher resistances. Almost forgot that I also have some horizontal levels here on the chart. So looking for a move to the upside locally to at least a 382, then observe the structure. Bulls want it to be motive, so an impulsive move up, corrective move down, continuation. Bears want it the other way around. They want a corrective structure to the upside and then look for price to move down. Generally a diagonal though, which is the bearish scenario. Generally a diagonal has lower probabilities, especially a leading diagonal, has lower probabilities than a corrective structure. So that in general would reduce the probabilities for the bears, increase the probabilities for the bulls. And you can also see, which is a little side note, I suppose, but even if you would take out this low, wouldn't be too great for the bulls, as this move up here counts best as an impulse. But then if you take out this low, the bears, or the bulls are going to be counting WXY. So you get WX and then you're looking for Y and then a move up. So if price would take out that low, then that is going to be your alternative bullish scenario, which at the moment it's not a priority at all because, you know, we haven't taken out that low. And yeah, at the moment, this is primary and this is secondary. And what is most important is that locally in both of these cases, we're looking for price to at least create a bit of a bounce, and the 302 generally is a minimum target. So yeah, that being said, hopefully this video was helpful or valuable to you. On the left, you see a video on the simplest way to use and trade Elliott waves without even counting. And on the right is the altcoin analysis playlist where you can find many more altcoin videos. Thanks for watching and subscribing, and I hope to see you at the next one. Bye-bye.